I'd now like to introduce Wayne Godwin, the Senior Vice President of Hotels and Hospitality at Jones Lang LaSalle, to come up and introduce Olivier Granet for an investment hard talk. Thank you.
Great. Thanks, Matt, and good afternoon, everyone. It's great to be here discussing one of my favorite topics, hotel investment in Africa. And it's particularly good to be here in Dubai having this discussion and profiling the region to a broader audience who maybe hasn't had the same exposure to what the Africa investment story is. And it's a fascinating one. You know, Africa currently has around 1% of the world's hotel supply, and within the next 30 years, we'll have 40% of the world's population living on the continent. Now, this incredible demographic dividend is, it's evidenced by the fact that 17 of the 20 fastest growing cities in the world right now are in Sub-Saharan Africa. So it is dynamic, urban, young, connected population that will travel, and hotels will benefit. Now, of course, it's not that straightforward, and it's a region that certainly has its challenges. With 54 countries, it is in no way, shape, or form a homogeneous story. So I think someone who understands the story and someone who's certainly a big part of the next chapter, delighted to be joined by Olivier Granet, CEO and Managing Partner for Kasada Capital Management. Great to be joined here. Good. Olivier, I want to get straight into it. Why Africa? And please, for anyone who's not familiar with Kasada, please can you give us a bit of an overview?
We are an investment platform, and we are looking at all Sub-Saharan Africa in all key cities in Sub-Saharan Africa. And we look at all market segments. But why Africa? I think it's interesting where on the previous panel we had different mixed information about potential and challenge. So I think the starting point is to understand what is missing in the market and how to address the market needs, which is the reason why we believe that it's important to operate as a solution provider where we have to combine the financial resources and the capital that we can deploy with also the operational aspect, and thanks to our partnership with Accor. So we are supported by Accor and the Sovereign Wealth Fund of Qatar. We have raised the equity, and in July we have announced a partnership with AHIC, the World Bank, and also Proparco, in order to have the visibility and the capacity to finance in this very critical period.
Now, I mean, the last 19, 20 months have been incredibly challenging for the world in hospitality, and we've all run out of the superlatives to describe it. But, you know, having entered this period and making your maiden deployments through it, what have been some of the challenges and learnings and I guess strategy that you have adopted, and just tell us a little bit about some of the deals that have happened to date.
Yeah, we have 10 hotels. We have invested in 10 hotels in 4 countries, representing 2,000 rooms. So far, mainly on Francophone Africa, so Senegal, Ivory Coast, Cameroon, and the latest one is in Namibia. And Namibia represents, I believe, it's our latest deal, and is a good example of what we can provide to the market, where you have independent owned hotel, owned by 2 different families for a long time, some succession and new generation coming in the family, with a financial pressure and what we can see number of properties, some issues for the capex. And this is all of this pre-COVID crisis. So the COVID crisis is just an accelerator. And this is where we can provide a solution to take out the financial pressure, to bring international operator with accord, to renovate the properties, and to relaunch the properties, so to rehire the staff and to have a new chapter for the property. And in fact, that's the two largest properties in the countries, with also the main conference center in the country, up to 2,400 delegates. So it's important also for the government to make sure that this is working properly. And this is what we are doing, and again, always trying to combine what is the understanding of the needs and how we can provide financial solution and to come with a hotel operator as well.
Yeah. Good. And I guess a lot of those needs, if we look at the last 20 years and the rise of the hospitality sector in Africa, it's been quite concentrated from a product point of view and a focus on certain source markets and regions. You know, the rise of the domestic and regional traveler is critical, as we all know and have heard. And how does this affect your strategy and the products that you're targeting within that?
Yeah, I think it was important to come back also to the discussion before about agility and how do we understand the market. So it's important to realize that a number of hotels have been built 20, 30, 40, 50 years ago with a certain type of clients, and we can imagine that a number of these hotels does not necessarily correspond today of this African emerging middle class, this young generation, and all the people traveling in Africa. So there is this perception that the value for money is not always there. So our mandate is to provide some attractive product corresponding to this market needs, and to have a value for money approach which can make sense. And I believe that there is absolutely no reason for all the people living in Africa not to get the same type of quality standards that you expect in the rest of the world. That's what we are looking at, but always with the issue. You said about challenges, and I mean, you know the famous quote about location, location, location. For hospitality in Africa, it's financing, financing, financing. That's the key issue, and this is where it's important to bring the critical size and to bridge the gap between the local investor and the financial institution, where we need to provide some access to financing at reasonable its cost, of course, but it's also terms and conditions.
And I guess that product is one component of the overall tourism value chain, and what you mentioned around it being incredibly difficult and expensive at times to travel around Africa. And I think that's probably something that resonates with a lot of people in this room. And what do you think are some of the things that can be done broadly by the sector, by governments? Where are some of the easy wins that alleviate this?
The support to the sector is well, everywhere in the world. That's a key question. We fully understand that the capacity for a number of governments in Africa to provide financial support is limited. However, there is a number of ways to look around, and this is about what represents the sector, the 10% of the GDP in terms of employment, and how we can create the ecosystem and the communication in order to facilitate the travel and to welcome the guests with something which is critical and which has been mentioned several times, which is the access to the talent. So the capacity to have the proper training and to have the qualification recognized by a number of governments is something which is really key. So I believe that it's not only a question of putting money and supporting the sector, it's creating the system and the right message to make things possible, and including the typical discussion as investor on tax incentive and how we can promote the activity. But really, the promotion of local talents with the necessary school and training is really what is needed in a number of countries.
And I guess as a follow-up to that, do you see progress in this? I mean, we look at policies like the African Continental Free Trade Agreement. We see a lot of these sort of, policies coming to the forefront. But I mean, where practically are we seeing progress in this area?
You're absolutely right. The reality today, it's expensive to travel in a number of countries. So we know that for most of the markets in Africa, when everything is fine, the occupancy is usually 50-60% max, because you have the leisure clients missing. So when everything is fine, the hotel during the week are working properly, but then on the weekends there is not so many guests. So this is a development for the future, to have, like everywhere in the world, more capacity for the leisure guests to travel on the weekend and holidays for cultural, sport event, visit of friends and families, like it exists everywhere, which means that it's a question of cost to travel. But we strongly believe that this African Continental Free Trade Agreement, which enter into force on 1st of Jan, of course it will take some time, and it will be step by step, but that's a very structuring factor that will help and facilitate the business and the travel of people in Africa to benefit from the size and the population of the continent. So we always look at it with the 1.4 billion inhabitants and all the potential on the market. The reality today that is very fragmented. So this step by step will evolve and will, I strongly believe, facilitate the development of our sector.
Great, and I think a big trend that we've seen as JLL over the last 10 years really is this. 10 years ago, you could really look at Africa and paint a lot of different countries with the same brush, and there was very much a homogeneous East Africa, West Africa, South Africa, Indian Ocean story. And I think something we've seen is just how the maturation has required sort of a lot more granular understanding, and it's very apparent that the top performing assets in a market outperforms the stragglers quite significantly, and you really do need this granular street corner analysis of hotels and hotel performance. I mean, from your perspective, still looking at the macros at a country level, though, despite that, what stands out to you as regions or markets that are particularly attractive right now?
Well, the good news is that you can find some nice opportunities in almost every key cities in Sub-Saharan Africa. The reality of each market is very different, but I don't fully share what has been presented before about the potential oversupply. And the question is, what is the reality? And it was the good question from Trevor about the difference between the pipeline and what is actually delivered on the market. So markets are different. What is important is to have the right understanding of the different dynamic of the market to come with attractive product, and we believe that there is a lot of opportunities. And even if you take the most developed market, and it was a discussion on South Africa, for example, if you take a market such as Cape Town, which look very mature and developed, you still have a number of market segments which are not properly covered yet, where you can bring something new and different. And this is valid, I believe, for almost every key market where the reality might be different, but you always find some good opportunities, because either it's a new market segment in a city, or this is a new geographical area within the city where you can find the city evolving and developing. And that's something which is really key, and why there is a need to have local partners and people on the ground and good understanding, because if you are in London, Paris, New York, you have a quite good understanding of where is the best street in the market. Where you are in emerging and evolving cities and you are betting for the next 15, 20 years, you can see certain dynamic and certain part of the city which are evolving, and
Yep.
this represents some good opportunities.
Could not agree more, and I think we've seen that in the uptick of liquidity this year, and as banks need to make decisions and owners need to make decisions, we clearly expect to see some more transactions coming to market. So I guess that is a good segue into talking about a recovery and how it's going to be driven. And I think there's something we discussed around this, and how big a part is ESG as part of this story. You know, we see it as a huge emerging trend globally in real estate and hospitality in particular. Hotels are absolutely the worst consumers of heat, light, and power on a per square meter basis. Africa's unique in this context, and I think there's a huge opportunity to attract capital. I mean, how do you see this playing out in the recovery from an investment point of view?
Well, the good news is that since yesterday we have a number of figures to be positive and to see the recovery, to see what is happening in Dubai, and there was some good numbers. So no doubt about the recovery, even if then it's about the timing. But what is important is to look at the condition for the recovery. And we strongly believe that you have two levers. One is about the protocol in terms of safety, hygiene, and what you provide in the hotel to make it safe for the people to travel. And I think that everyone after this period is looking for a certain balance in his personal and professional life, and wants to travel with a certain level of reinsurance, something healthy. And so this is a trend that is everywhere in the world and also in Africa, with also all the ESG components. So if you want to be investor, if you want to provide the right product for your guest, you have to take a number of parameters and commitment. That's what we are doing in number of different areas where we like to push boundaries in terms of gender parity for the pay, in terms of development of local talents, in terms of green buildings, in terms of local sourcing, support of local communities. And the good news is that for a number of years, it was a kind of trade-off where how many points of my return I'm ready to leave on the table to have the right sustainable development commitment. Where today, not saying it's easy, but today you can find a number of solutions to do it right and protect at the same time your business model, with the right mindset, with the right advisor, and with innovative and different approach. And that's quite exciting, and that's what we're looking at.
Fantastic. I think we almost out of time. If there are any questions, we'd love to hear them. I see one hand going up already. Is there a microphone? Or?
Merci. Quick question, in fact, two questions. One is there some structural challenge the way Kasada operates, in as much as the financing will go to Accor facilities or facilities that may fold down the road in Accor fold? And secondly, as far as I know, the vehicle is structured in the Mauritius IFC. To what extent tax planning, tax optimization form part of the cross-border financing?
not sure to fully understand the first question.
My understanding, it's a Kasada is structured between ACO and Qatar Investment Finance.
So Kasada is an independent investment platform with private equity.
Yes.
And we have two, what we call LPs, limited partners, one being Accor and one being Qatar Investment Authorities. So we deploy capital, and then our projects are managed and branded with Accor as operator. So I hope that it helped to clarify. And to come back to your second question, probably around 80% of the investment fund in Africa are based out of Mauritius, which is not only a question of tax, because I mean all our properties, we have local company and we operate in a number of countries, and we are paying tax in each country in which we operate. So it's more a question of treaty between different countries and financial support that, financial expertise that you have for the administration of funds that exist in Mauritius, and that make it as a quite interesting basis to operate in all Sub-Saharan African continent. And that's one of the key reasons to do it from Mauritius. Probably in the coming years there might be some other alternative and other option to do it, but so far most of the funds operating in Africa do it. But again, in each country we have now, I told you, 10 hotels, around more than 800 employees, and we are paying our tax in each country where we operate.
Good. One last, do we have time?
One quick one.
One quick one.
Yeah, mine is quick. Well, congratulations. It's been a tough year, but I see you've been busy and gone a long way. The first question would be, so what's the total size of the initial fund as far as assets under management? And what is the business plan? Meaning, do you want to grow subsequent funds, always in Africa? And from what I understand, there's not that many competitors, no, with this global approach on just on Africa hospitality from the private equity side.
Yeah, you're absolutely right. So we have raised $500 million as a capital commitment. We don't have so many equity. We don't have so many players in the market, so the lack of institutional capital in Africa is a key challenge. As you probably are well aware, you have some investment well structured in Morocco, you have some in South Africa, but as a Pan-African large investment firm, it's very limited so far. And we believe that, yeah, we have to build our own track record, and every time we can see some new market players and new entrants, we consider that it's a good news, it's a good sign of maturity of the market, and it will raise some more liquidity and some more opportunity. That's what African market is needed. Competition is always healthy, and there is so many things to do. So as an investment fund, that's what we are looking at, to see, to demonstrate that this can work, and to expect that the market will become step by step more and more attractive for a similar well-established fund to penetrate the market. And of course, we want to continue, and in the life of private equity, you first have to demonstrate that you do it right, and you deploy your capital and you generate a good return, which is then the support to raise additional funds. That's how it works.
Great. And that's all the time we have for today. Thank you very much for having us. We look forward to discussing Africa at home and here whenever. Thanks.
Thank you.
Thank you. Thank you, Olivier. Thank you, Wayne, for asking the questions.